Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How's it going today? Yeah, me too. Hope you're having a good day out there. Today we're going to talk about REITs, and these keep coming up over and over again. I see the performance out there. We build and manage our own portfolios, and we actually have our own REIT portfolio that we build here, and so they're made up of all the individual companies. I understand that things are looking really good. So I get these questions like almost every day now. Dustin, REITs, you think I should be in REITs? Should I get started on some REITs? I see the REITs are taking off there. Should we go? Do you think they're going to go higher? Well, it's exciting right now, but if you're a growth investor, my purpose today is to kind of show you if you're keeping track with your growth sort of focus. So if you're aggressive, younger, or you're a little bit older and you can afford to take some risk or have to take some risk, we want to kind of take a look at REITs as they compare to the overall market. So I'm going to look at the S&P 500, and we're going to say that that's the default for someone who's trying to be in more of a growth position there. So if we pop up the charts here, we'll cut on over to that. The first thing I'm going to share with you is the S&P 500. So that's going to be the purple line as we look through these charts here. And you can see if we look back a year, this is actually 1 year's worth of data, we got about 5.6% in terms of returns. Now here's the thing. Now I did this real quick. I didn't pick favorites or anything. I just kind of went through and picked a few ETFs that went over a couple different companies that have different models and things just to give us some point of reference here. So what I'm going to do is first add in the ICF. This is one that I reference on the closing beat all the time. It is a REIT ETF, has a little bit different approach than some of the other ones there. But if we post that on the screen there, all of a sudden looking back over 1 year, 16.6%. Man, that thing's looking pretty good as compared to the overall market. So we got 16% there. At the moment you go, yep, I understand why there's so many emails, right? People are looking, they got to be a part of these REITs. They're really performing well. If we look at the VNQ, that's a Vanguard product. Wanted to include a Vanguard product for you guys in there. Here you go, the VNQ, that's going to be your light blue line, 12.4%. Doesn't mean it's worse than the ICF, just a different way of going about business in the REIT space. They're two totally different companies, so understandable if they're going to do things a little bit different there. And so we put that in there just to show, well, they're also doing really, really well. That's clearly a focus. I wanted to pick one other one. I chose the Schwab ETF, Schwab REIT ETF. It's SCHH if you want to take a look. Just wanted to have 3 different comparables in there from different companies with different models as well. And you can see they're sitting at 10.3%. Still nothing to sneeze at. That's pretty good there. And if we look over the last year, we're looking really good. There's a good argument to say I should be in REITs. They've performed well. Now, I'm going to zoom out here as far as I can go and just show you how REITs compare to the markets in general. If you're a growth investor, picture that purple line as your growth focus. You want to be as much as possible, as aggressive as possible. If you look at that, here's the comparable returns looking at the overall stock market going back to 2011. Looks like we're at 2011 there. So in the long run, REITs are not a growth area. It's not somewhere that's going to be all this, high-flying, strong-moving areas. They have their moments, of course, and they of course, do really well. But a lot of people are watching this now. You're probably going, wait a minute, what about the dividends, man? Are we factoring in dividends there? Well, let's do that here. So we've got the S&P here. This is total return, so this includes all the dividends and everything. Now we're going to take the ETFs. Bear with me. It's going to look like a mess for a second. We're going to take the total return of those 3 ETFs, not just the raw numbers. So now, at the bottom, you've got the Schwab ETF, the SCHH. You've got the iShares ETF, the ICF, and you've got the Vanguard product down here in the light greens. That's your VNQ. If we add in the dividends, the returns get better. The actual net return after you get paid the dividends and the growth and everything along, appreciation, of course, you still end up tracking behind a little bit. Yeah, there are moments where you stand out and everything looks really good, but in general, this is a slower moving area of the market, and that's really what I wanted to highlight for you today, is not that REITs are bad. It's not that you shouldn't have some sort of exposure to that. It's that in general, if you're an aggressive investor, don't get too heavy in REITs. If you get too heavy in REITs, you will regret it long term just by the very speed of how that sector moves in general. Well, I hope that helps you there. We, of course, hope you'll join us later for our closing beat show, where we do talk a lot about these ETFs here and their performance throughout the day. We call it the closing beat because it's just a quick stock market update. It's live at 5 o'clock Eastern time every day on our YouTube channel, Jazz Wealth Managers. Sure hope you'll keep us in mind, Jazz Wealth. You can go see our portfolios. Even our REIT portfolio is on our website there with the performance and everything, so you can check it out. If this helped you in some way, I know this was a quick one today, but maybe you'll take a second and hit the subscribe button and the thumbs up. That helps us in some way, and however it helps us, I'm appreciative for it. Thank you guys for watching. Have a great rest of your day.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.